On April 17, 2025, a 27-year-old trader named Ethan booked a one-way flight to Bali, not to celebrate a win, but to recover from a mental breakdown. His journal entry that day simply read, "I made $68,000 in 3 months. Then I lost it all. But it wasn't the money that broke me. It was what trading turned me into." He wasn't alone. That same month, a private retreat in Costa Rica sold out in under 3 minutes. Price tag, $9,800 per seat. It wasn't a hedge fund conference. It was a trading therapy camp. They meditated on losing streaks. They journaled their emotional triggers. They practiced breathwork between backtests and risk management drills. In 2025 alone, traders spent over $1.1 billion on coaching, therapy, and wellness retreats. Not on strategies, not on courses, on staying sane. And it begs the question, why is a skill that's supposed to be rational driving people to the edge of their sanity? This video will take you behind the curated screenshots, behind the profits, behind the dopamine. You're going to see why trading isn't just about execution, it's about emotional resurrection. If you're watching this, you're probably not new to the screen. You know the drill. You've studied setups, you've watched the webinars, you've tried the indicators, you've blown up, scaled up, and maybe blown up again. But here's the part nobody prepared you for. The silence after a $3,000 loss. The 2 a.m. chart scrolling when your chest won't stop pounding. The flood of shame when you lie to your spouse about how the day went. Or worse, the feeling of nothing after your biggest win because it didn't fix the hole you were trying to trade your way out of. Welcome to Disciplined Trades, where we don't sell hype, we dissect the mind. Where psychology isn't an afterthought, it's the main trade. This isn't another 5 steps to trade like a pro video. This is a story. A science-backed dissection of the $1 billion explosion of trading therapy, retreats, and mindset coaching. Because it turns out the thing destroying retail traders isn't a lack of edge. It's emotional fragility disguised as confidence. It's ego wrapped in FOMO. It's self-worth tied to green candles. In the next 60 minutes, we'll reveal the real reason even profitable traders burn out. The dark psychology behind just one more trade. Why dopamine is your worst trading partner. And the 7 actual mind rewiring techniques pros are quietly using, while influencers keep selling you dreams. And stick around to the end, because the final strategy we cover is not about charts. It's about what one hedge fund calls the internal kill switch, a protocol that saved me from quitting trading and nearly saved my life. If you've ever felt like you're losing your mind more than your money, this one's for you. And comment below, what was the last trade that emotionally wrecked you? Just a ticker and the feeling. No judgment. Just truth. We'll read every one, because trading might be a solo pursuit, but you don't have to lose alone. Chapter 1. The Therapy Boom. Trading's billion-dollar cry for help. On a humid Thursday morning in May 25, a luxury resort in Tulum turned away 47 traders at the gate. They had flown in from 6 countries. Some spent their last trading profits to get there. But the retreat was full, sold out for months. Not a trading boot camp, a healing retreat for retail traders, meditation at sunrise, therapy sessions on loss addiction, cold plunge after journaling sessions titled The Setup That Broke Me, $12,000 for 5 days, gone in 18 minutes. This isn't fiction, it's the new reality of trading. In 2025 alone, traders spent over $1.1 billion on therapy, mental coaching, and wellness retreats. That's more than the entire US market for Forex education. For context, only $200 million was spent on actual trading platforms. Think about that. We're not investing in better tools. We're trying to repair the person behind the tools. And here's the part nobody talks about. Most of these traders weren't losing money. They were making it. They just couldn't feel anything anymore. Because profit without peace is just another prison. Let me introduce you to Ethan. He started with $1,000, scalped aggressively, built it to $68,000 in 4 months. His Discord hailed him as the sniper. He posted screenshots. He sold a signal service. He quit his job. Then one day he placed the same setup he run 127 times before. And it failed. He doubled down. It failed again. Losses stacked. He kept chasing, In 3 weeks, his $68,000 account read $412. The money was gone. But what really broke him was what he wrote in his journal that night. I don't know who I am without a green candle. I only feel valuable when I'm winning. He wasn't chasing profits. He was chasing identity. So what's really going on here? Simple. Trading is emotional warfare. Every click risks not just capital but validation. When the red candle appears, it's not just price going down. It's your self-worth, your future, your competence. You're not managing trades. You are managing dopamine withdrawals, childhood approval patterns, and subconscious self-sabotage, all in 5-second candles. Neuroscience backs this. Stanford neuroeconomist Dr. Brian Knudsen found that the brain's dopamine system reacts to anticipated gains in trading the same way it reacts to cocaine. The pleasure, anticipation, the crash after execution. The compulsive loop of craving, action, crash, crave again. But while coke is illegal, MetaTrader is free. The withdrawal symptoms are the same. Sleepless nights, obsessive thought loops, mood swings, self-destructive patterns, and isolation from real life. You ever place a trade you knew you shouldn't take, and as soon as it's live, you feel regret but still hold it anyway? That's not bad strategy. That's a chemical dependency on risk. And it's not just losing traders suffering. Many of the people at those retreats, they were 6-figure traders, funded prop desk traders. Even hedge fund guys quietly stepping away for a few days because they couldn't stop hearing that voice in their head. If I stop trading, I'm worthless. There's a term for this in psychology. Performance-based identity. Your sense of self becomes dependent on outcomes. If you're green, you're good. If you're red, you're garbage. Now multiply that by leverage, by public metrics, by profit screenshots, by TikTok gurus flaunting Lambos bought with affiliate revenue. You don't just feel pressure. You feel invisible when you're not winning. That's why the retreats sell out. Not because traders are soft, but because for the first time in trading history, a generation of retail traders is admitting, I'm not okay. Let's get brutally honest here. You've probably Googled, can trading cause depression? How to stop revenge trading? Why do I hate myself after a loss? We all have, but here's the trap. We think the solution is to try harder, to read more, to backtest more, to master one more edge. But in reality, the wound isn't technical. It's emotional. Most traders aren't failing because of market conditions. They're failing because they've tied their self-worth to performance. That's why the traders who last, they do the inner work first. They create separation between their trades and their identity. Paul Tudor Jones said it best. The secret is to be disciplined. But discipline isn't just action. It's detachment. The takeaway. If you're nodding right now, this is for you. Before you download another trading tool, download this question into your daily routine. Am I trying to improve my execution or repair my identity? Because here's the truth. One leads to mastery. The other leads to meltdown. You don't need another entry signal. You need to stop bleeding self-worth with every red candle. So start here. Write down your trader identity, who you want to be when you're in the chair. List the traits: calm, focused, methodical, detached. Every morning, step into that identity like an actor stepping into a role. Trade from the identity, not from the ego. Because when you trade from a grounded place, the setups take care of themselves. If you've ever searched, why does trading make me feel empty? Comment guilty. We'll reply with a framework that helped dozens of traders reset their mind. Chapter 2, The Invisible Wound. Why smart traders still self-sabotage. She had a PhD in statistics, she taught financial modeling at NYU, she published papers on risk management, and in her second year of full-time trading, she blew a $300,000 account. Not because her strategy failed, because she did. Every signal was valid. Every trade had an edge. Every rule was written and then broken. And when she finally sat down with a performance psychologist, she said something that stuck. I know how to win. I just can't stop sabotaging myself. You ever feel that? Like there's this version of you who knows exactly what to do, but when it's game time, that version disappears and a completely different person takes over? Welcome to the invisible wound. The internal split between knowing and doing. This is why smart traders fail. Why founded traders self-destruct. Why logic, edge, and education still lose to emotional chaos? Because trading doesn't just expose your skills, it exposes your deepest patterns. Here's what the science says. Neuroscientist Dr. Joseph Ledoux found that emotional responses are 12 to 15 milliseconds faster than rational thought. That means before your prefrontal cortex, the logic part of your brain can say, "Don't take this revenge trade," your amygdala, the fear center, has already acted. By the time you realize it was a mistake, the order is filled. Your heart is pounding. This is why most trading mistakes aren't strategic. They're biological. Your system didn't fail. Your nervous system did. Let's go deeper. Behavioral finance calls this cognitive dissonance, the mental discomfort of holding two contradictory truths at once. Truth number 1, I'm a disciplined trader. Truth number 2, I just tripled my position size out of revenge. The discomfort has to go somewhere. So your brain starts rationalizing. It was just a high conviction setup. I saw something others didn't. It wasn't revenge, it was correction. You lie to yourself to preserve identity. But every lie costs you clarity. And without clarity, your edge dissolves. This is the real enemy, emotional incoherence. When your internal state contradicts your trading plan, you won't execute. Or worse, you'll execute perfectly on the wrong emotion. That's why some traders journal obsessively, meditate, or hire performance coaches. Not because they're weak, because they understand one thing most traders ignore. You can't execute like a pro if you think like an amateur. So how do we stop sabotaging ourselves? Not with more information, with integration. You need to align 3 things: your identity, who you believe you are, your rules, how you say you trade, your actions, what you actually do. When these 3 things match, you become unstoppable. When they don't, you implode. Here's a tool that changed everything for one of my students, the Rule Alignment Tracker. At the end of each day, she logs every trade with 3 notes. Did this trade match my identity? Did it follow my rules? Did I feel in control before, during, and after? Then she assigns a self-alignment score from 1 to 10. Within 30 days, she noticed something shocking. Her losing trades weren't the issue. Her misaligned trades were. She was profitable even when wrong, but every time she felt emotionally hijacked, the loss was exponential. Now she doesn't track PL, she tracks internal alignment, and that made her consistent. Here's the scary part. Every trader has a sabotage loop. Some break it with journaling, some with coaching. Some never break it, they just keep switching strategies until they finally quit. But the pros? They don't ignore the emotional system. They install safety mechanisms around it. One hedge fund I worked with has a literal protocol called the emotional firewall. It's triggered by 3 red flags: deviating from average position size, breaking time-based rules, hiding trades from their team. If a trader triggers 2 of 3, they're forced into a mandatory review before placing another trade. It's not punishment, it's protection from themselves. The takeaway: if you keep repeating the same mistakes, stop asking, what's wrong with my strategy? Start asking, what part of me benefits from the sabotage? Because self-sabotage is never random, it's familiar. It's how your nervous system protects you from uncertainty, from change, from responsibility. You don't fix it with more information. You fix it by becoming emotionally congruent. Start with this question: who do I become when I lose? If the answer is anything other than still in control, you found the work. Drop a fire in the comments if you've ever watched yourself make a stupid trade and couldn't stop it in real time. You are not alone. You are just human. And now you know how to change it. Chapter 3: Dopamine Debt: How Trading Hijacks Your Brain's Reward System. First time he made $1,000 in a day, he couldn't sleep. He paced his apartment like he'd just survived a car crash. His chest was on fire. His mind wouldn't shut up. He felt like he could lift a truck. Second time, same result, but shorter. Third time, barely a head nod. By month 4, a green day under 5K felt like failure. He wasn't trading anymore. He was chasing a feeling. This is dopamine debt, and it's a silent killer of retail traders. Not fear, not lack of edge, not the market. Neurochemical tolerance. Dopamine isn't the pleasure chemical. It's the anticipation chemical. It spikes before reward, not after. When you're scanning charts, lining up trades, imagining outcomes, that's when dopamine is at its peak. But the moment you click buy, it drops. That's why some traders feel let down, even when they enter the perfect setup. They weren't chasing profit, they were chasing the rush leading up to it. Now here's the dangerous part. Your brain adapts. It gets used to that dopamine surge, which means it takes more risk to feel the same high. This is called neural adaptation. Same reason gamblers bet bigger, same reason addicts spiral. Trading doesn't feel good anymore. It feels normal. So you start pushing bigger size, more trades, tighter time frames, more leverage. Not for strategy, for stimulation. You're no longer trading. You're self-medicating. The crash comes slowly, not in the PL, in the nervous system. You stop enjoying wins. You panic at losses you used to tolerate. You need to check charts every hour just to feel alive. It's not just burnout. It's neurochemical depletion. Stanford's Dr. Anna Lemke calls it the dopamine deficit state. Every spike in pleasure creates a counterbalancing crash in pain. The higher the high, the deeper the low. In trading, that low shows up as tilt, impulsivity, overtrading, emotional flatness, or the feeling of urgency without clarity. Sound familiar? You're not crazy. You're in the chemical loop. The worst part? Screens intensify it. Flickering charts, social media screenshots, discourse full of print gang hype. Each one is a mini dopamine slot machine. You're feeding the loop all day long. Even when you're not in a trade. This is why some traders can't relax. Even on vacation, even after a profitable month, even when they say, I'm taking a break. Because dopamine isn't logical, it's primal. And here's the kicker. Dopamine doesn't care what you're anticipating, only that you're anticipating something. So a revenge trade, a FOMO chase, a size up on impulse, all get rewarded with the same pre-trade rush. That's how your brain wires bad behavior into habits. But there's a way out. The pros call it dopamine discipline, not abstinence management. The goal isn't to eliminate dopamine, it's to retrain your brain to find reward in the right things. Following your plan, journaling the trade, not taking a bad setup, respecting your size, stopping when the plan says stop. Each of those is boring, but each is a micro win. Stack enough of them, you rewire the loop. Here's how one prop firm does it. Every trader has a dopamine tracker. Each trade gets 2 ratings. Did I feel the dopamine surge before placing this? Did I act from system or from stimulation? If they answer surge plus stimulation 3 times in a week, they're forced into a cold protocol. 24 hours off screens, journaling only, no Discord, most hate it, all improve. Because the reset works. Want a solo version? Try the 48-hour reset. No trading, no charts, no YouTube, no Discord, no backtesting. Replace it with 2 long walks, 1 deep journaling session, 1 written trading manifesto, 3 reflections on your last tilt. You'll feel withdrawal. That's the point. You'll also feel clarity. And maybe for the first time in weeks, you'll feel calm. You don't have a discipline problem. You have a dopamine problem. And it's not your fault. It's your biology. But now that you know, you can take back control. Next time you feel the itch, don't scratch. Breathe, observe, ask, am I seeking clarity or chemistry? Comment reset if you've ever felt addicted to the rush. I'll send you a protocol that helped me break the loop. Chapter 4. How a simple ritual can rewire your brain. He stood in front of his screen, frozen. Price was coming to the level, exactly as planned. But he couldn't click. His palms were sweating. His heart was racing. His brain was spinning with what-ifs. He closed the platform, went to the mirror, and put on a suit jacket, the same one he wore in his old 9-to-5. Then he walked back to the screen, took the trade. No hesitation. Win or lose full control. Why? Because that jacket wasn't fabric. It was a persona, a psychological costume that signaled the trader is now present. This is called identity separation, and it's one of the most powerful brain rewiring tools in trading psychology. Not affirmations, not vision boards, not motivation, ritual. Here's why it works. The human brain is contextual. It associates emotion and identity with environment. You feel different at the gym than in church. different at the dinner table than at a funeral, different in sweatpants than in a suit. Why? Neural pattern recognition. Your brain isn't processing logic, it's processing cues. When you build rituals, you train your brain to shift states on command. Great traders know this. They don't just prepare, they transform into someone else, someone calmer, more focused, less reactive. They create distance between their emotional self and their execution self. That distance, it's everything. Let's take it deeper. Your everyday self is full of baggage. Stress from your job, doubt from your past, fear of letting someone down, noise from your phone, inbox, bills. All of that walks with you into the chart. Unless you leave it at the door. Actors do this for a living. They slip into character. Same face, different being. What if you did the same? What if your trader persona had a name, a look, a ritual? What if trading wasn't just something you did, but someone you became? Performance coaches use this with elite athletes. It's called deliberate identity activation. Michael Jordan became Black Jesus. Kobe stepped into the Black Mamba. Beyoncé created Sasha Fierce for stage presence. Why? Because your nervous system responds to roles, not just thoughts. Your brain needs a container, something to say, I'm not me right now, I'm this. Here's how you use it in trading. Step 1. Name the persona. Something strong, intentional, maybe even a little ridiculous. Examples: the architect, the Iceman, the executioner, the process machine. Step 2. Design the ritual. Make it multisensory. A specific jacket or hoodie, a certain chair, a Spotify playlist, a 5-minute breathwork session, a cold glass of water, a power phrase whispered out loud. Whatever makes your nervous system say, something is about to happen. Step 3. Activate before every session. No exceptions, no lazy launches, no click and hope. Enter your role. Step into the trade as your persona. Why does this matter? Because when your everyday self panics, your persona doesn't. The executioner doesn't feel FOMO, the Iceman doesn't double down, the architect doesn't chase green candles, he follows the plan. He respects the rules. He knows who he is. One trader I worked with used to tilt every time he took a loss. He'd spiral, revenge trade, break rules, blow up days of progress, until we created the pilot. The pilot doesn't get emotional, the pilot doesn't deviate, the pilot flies the checklist. He taped a real aviation checklist to his wall, went full Top Gun. Now when a trade hits stop loss, he logs it, nods, and says, next mission. It sounds silly, but he hasn't tilted in 6 months. This isn't magic, it's neuroscience. The brain can't distinguish between imagined and real roles. As long as the cues are consistent, the identity holds. Takeaway: your biggest edge might not be in your system. It might be in your state. Who you are when you trade determines how you trade. So stop trying to force discipline. Start becoming the version of you who doesn't need to. Because when you step into your role, the fear quiets, the mind focuses, the plan gets honored. Not because you are stronger, but because you are someone else. Comment your trader persona below. One word, one identity, one shift. Let's build your role together. Chapter 5. The Setup Addiction. When good enough is never enough. He had 5 winning trades in a row. Every single one followed his plan. Clean entry, disciplined stop, managed exits, and yet he couldn't stop scrolling. He couldn't stop looking for one more. Not because he needed the money, but because his brain whispered, what if the real setup is next? This is setup addiction. And it's way more dangerous than it sounds. Not because it makes you reckless, because it makes you restless. Let's break it down. Setup addiction isn't about greed. It's about discomfort with stillness. The trader who needs to be in a trade, who can't walk away after 3 wins, who scans charts on Sunday night after promising to take the weekend off. They're not chasing profit. They're running from silence. Here's the truth. The best traders don't find more setups. They execute fewer with more size and conviction. They wait. They watch. They let the market come to them. But that's not what gets clicks or dopamine or attention. And so the restless ones lose. Not because they don't know how to win, but because they can't stop trying to win more. Psychology calls this intermittent reinforcement, the same system that powers slot machines. Sometimes a setup works, sometimes it doesn't. The inconsistency creates compulsion. Your brain doesn't want reward, it wants uncertainty of reward. That's what keeps you coming back. Even when you're tired, even when you should be done, even when you know the edge is gone, you're not trading, you're rolling dice. Here's what happens when you're addicted to setups. You force entries that don't meet your criteria. You lower standards just to be active. You chase almost trades and call them intuition. You stay in front of charts long past your focus window, and you turn clarity into clutter. One trader I worked with had 13 setups in his playbook. 13. He convinced himself it was flexibility. In reality, it was avoidance. Avoidance of discomfort. Avoidance of waiting. Avoidance of saying no. We cut it down to 3. He hated it, he resisted, he feared missing out. But within 2 months, his win rate doubled, his screen time halved, his mental fatigue disappeared. Because the setups weren't the issue. His addiction to them was, this isn't just psychological, it's neurological. Your brain builds habits around behavior patterns. The more you reinforce stimulation seeking, the more your brain demands it. You literally lose the ability to do nothing. And in trading, that's fatal, because waiting is the edge. Boredom tolerance is the edge. Restraint is the edge. Want to know what separates amateurs from pros? It's not strategy, it's selectivity. Pros don't need setups. They need the right setup. And they're willing to wait days, even weeks, to get it. They're okay with silence because they know every false trade cost me one clean one. Here's how one 7-figure trader handles it. He has a setup vault. Every valid trade gets screenshotted, labeled, and filed. But here's the twist. He doesn't execute on first contact. He requires the setup to appear 3 times in different environments before it becomes executable. If it only worked once, it's a fluke. If it works twice, it's potential. 3 times now is real. That's how he built a 5 setup system from years of data, not weeks, years. Because mastery isn't built on exposure, it's built on exclusion. Takeaway. Setup addiction isn't about strategy. It's about emotional regulation. You're not undisciplined. You're overstimulated. The cure? Start subtracting. Cut your playbook in half, then cut it again. Trade one setup for 90 days. Master it like a surgeon. Because real power isn't in knowing more. It's in doing less, better. Ask yourself, am I building a trading business or feeding a stimulation habit? The answer is in your execution. Comment one setup challenge if you're brave enough to cut the noise. Let's simplify together. Chapter 6. The Tilt Spiral. Why one bad trade destroys a week of progress. He only meant to fix a mistake. He overtraded, took a sloppy setup, got stopped out. Minus $325. Not the end of the world, just a scratch. But something in his chest tightened, a heat behind his eyes, the feeling of no way it ends like that. So he jumped back in. Same ticker, no setup, no plan, another stop, now minus 730. His hands were shaking, but the mouse kept clicking. He wasn't trading anymore. He was fighting back. 3 hours later, his account was down $3,421. His body was numb. His browser was open to funding challenge resets. This is Tilt. And it's the fastest way to burn a week's progress in one afternoon. But here's what no one tells you. Tilt doesn't start with a trade. It starts with your identity being challenged. You don't tilt because of red. You tilt because red says you're not who you thought you were. And that ego threat is unbearable. Tilt is grief. The 5 stages: denial, anger, bargaining, depression, acceptance. They all show up, sometimes in minutes, sometimes in milliseconds. Denial. That wasn't a real loss. Anger. This ticker is rigged. Bargaining. If I just size up, I can fix it. Depression. I'm so stupid. Acceptance. I blew it. Again. Except in trading, you rarely make it to acceptance before clicking again because the market gives you instant access to bargaining. One more trade, one more shot, one more hit to fix the pain. That's not strategy, that's trauma response. Here's the science. A study by Dr. Andrew Lo at MIT found that traders under emotional stress exhibited brain activity identical to PTSD patients. Fight or flight, cognitive narrowing, risk amnesia, time distortion. That's what tilt is, a biological override. Your logical brain gets hijacked by your survival brain, and your survival brain doesn't care about rules. It only cares about relief. And here's where it gets worse. Every tilt trade rewires your brain. It teaches your nervous system. When I feel bad, I act impulsively. That becomes a loop, a habit, a reflex, which means you're not just losing money. You're losing agency. But tilt doesn't have to be your identity. It can be your teacher. Here's how one trader broke the spiral. He created a tilt audit protocol. Every time he tilted, he had to 1. Record a 60-second voice memo describing exactly what he felt before the impulse. 2. Rate his urge from 1 to 10. 3. Journal what his inner voice said. 4. Screenshot his P, L, and lock his platform for 24 hours. He hated it, but it saved him because after 30 days, he realized every tilt trade had the same emotional fingerprint. He wasn't losing randomly. He was losing predictably. And that predictability made him powerful. Want to tilt-proof your system? Install a kill switch. Before every session, write this on a sticky note. 1 bad trade ends the day. No debate. No justifying. No rescue plays. If you break the plan once you're done, full shutdown, walk, log, detach. Yes, you'll miss some plays. Yes, you'll feel FOMO, but you'll keep your mind. And that's worth more than any scalp. Because tilt isn't a technical problem. It's an emotional eruption. You don't fix it with rules. You fix it with rituals. Patterns that interrupt the storm before it takes the wheel. Takeaway. If you've ever said, I don't know what happened, I just lost control. You're not broken, you're just tilting. And now you have tools. The moment your heart races, pause. The moment you want to make it back, pause. The moment you feel I can end red. Because one red day with discipline is survivable, but one tilt day with ego can end your career. Comment kill switch if you're ready to end tilt before it ends your account. Chapter 7. The Regret Loop. Why you keep repeating the same mistakes. You promised you wait. You said no more impulse trades, no more chases, no more mid-candle entries. And then you did it again. Same pattern, same mistake, same flush. You stare at the screen. Jaw clenched, fists tight, screen slightly dimmer than it was before. And somewhere between the sigh and the self-loathing, you whisper, why do I keep doing this? This is the regret loop. And if you don't break it, it will break you. Let's be clear. Regret isn't the problem. Unprocessed regret is. When regret goes unexamined, it becomes identity shaping. You don't just feel bad. You become the kind of trader who always messes up. And once that belief sets in, it feeds itself. Every mistake becomes proof. Every win feels like a fluke. Every setup carries the ghost of your past failures. So why do we repeat mistakes we know not to make? Here's the answer. Because most traders don't actually learn from their mistakes. They just feel bad about them. Neuroscience backs this. A study from the University of Iowa found that regret only leads to behavioral change if it's paired with reflective processing. In simple terms, just feeling guilt does nothing. You need to slow it down, dissect it, learn from it. Otherwise, regret becomes noise, emotional residue, something you carry instead of use. Let me introduce you to the loop. Impulse trade, loss or shame, regret, emotional suppression, no structural change. Same impulse trade. That's the trap. You're not broken, you're unprocessed. But there's a fix. It's called regret integration, a 5-step framework. Simple, brutal, honest. Use it within 10 minutes of a mistake. Step 1. Own it out loud. Say, I broke my rule because I wanted relief, not profit, relief. Step 2. Label the emotion. What were you actually feeling? FOMO? Shame? Boredom? Or maybe desperation? Step 3. Reverse time. Ask, what did I feel right before the click? Where in my body? What did the inner voice say? Step 4. Write the cost. Not just money. Time, trust, clarity, confidence. Step 5. Create the blocker. What system, reminder, ritual could have stopped this? One trader I coach uses a single browser extension that blocks his trading platform for 15 minutes after any loss. It gives him space, and space is where regret turns into insight. You want another reason you keep repeating mistakes? Because the brain doesn't remember lessons when they're emotionally charged, it remembers feelings. So when you tilt and punish yourself, you're teaching your nervous system mistakes equal shame, and your brain avoids shame at all costs. So it doesn't fully register the mistake because to do that would hurt too much. That's why reflection must be safe, neutral, objective. Like a surgeon, not a judge. Want to make this stick? Use the last trade letter. Write a one-page letter as if today's mistake was the last trade you're ever allowed to take. Describe it in detail. Emotion, logic, consequence. Then answer. If this was the last memory I had of trading, is that who I want to be? Most can't finish the page without feeling something shift. And that shift, that's the loop cracking. One of the best traders I've ever met used to tape sticky notes to every monitor. Each one had a single line. What would future me thank me for? That was his compass, not PL, not streaks, not size. Just integrity with the trader he was becoming. That's how you break cycles, by becoming too aligned to repeat them. Takeaway. You're not failing because of the market. You're repeating because you haven't reflected. And that's not weakness, that's neglect. The antidote? Slow down. Feel it, name it, integrate it. Because regret, when processed, becomes power. Comment, I'm breaking the loop if you're done repeating what you already know is costing you. Chapter 8, The Confidence Trap. When the win becomes your worst setup. His best trade of the year was the beginning of his worst month. 8,700 in a single morning. Clean setup, flawless execution, perfect size. He felt unstoppable. Posted it in the group. Got fire emojis. People called him a beast. He closed the laptop smiling, went for a walk, ordered sushi, slept like a king. Next day, he tripled his risk. Chased a breakout, ignored his system, lost $2,400. Didn't matter. He was still up. Third day, even worse. By week's end, he was down $6,200. And it all started with a win. This is the confidence trap. When a good trade creates bad behavior, you think the danger is in the red days. It's not. The danger is in the green ones that lie. That whisper, you've got this now. You've outgrown your rules. You're different today. But you're not different. You're just high. Here's the truth most won't admit. Confidence is dangerous when it's not earned through consistency. Because without structure, confidence becomes permission to oversize, to overtrade, to override your plan, to skip journaling, or to chase because you're up. This isn't empowerment. It's ego in disguise. And ego doesn't trade. It gambles. Let's hit the neuroscience. After a big win, the brain floods with dopamine. That chemical cocktail affects the prefrontal cortex, the logic center. It temporarily lowers risk sensitivity and increases impulsivity. Translation? You think you're being bold. You're actually being blind. That's why the trade after your best trade is often your worst. One study from the Journal of Behavioral Finance found that traders were 24% more likely to break risk rules after a large win than after a loss. Why? Because winning makes you feel safe. And when you're safe, you stop respecting the danger. Let's get personal. Have you ever double-sized after a win? Taken a setup you normally wouldn't because you're up. Told yourself, I'm playing with house money? Or ignored your system because you felt in the zone? That's not confidence. That's chemical distortion. And it costs more than you ever see on the chart. Because it's not just money you lose. It's integrity with your process. And once you lose that, the slide begins. Subtle, slow, deadly. One trader I coach calls this post-win paralysis. After every green day, he enters a 15-minute cooldown. No Discord, no charts, no trades. Just a walk and a journal entry. He asks 2 questions. What part of me wants to press today? How can I double down on discipline instead? Since adding this, his average losing streak went from 4 days to 1. Not because he stopped losing, because he stopped spiraling after winning. So how do you keep confidence from becoming a trap? Framework. Win-to wisdom protocol. 1. Celebrate internally, not online, not in public. Let the reward stay with you. Reaffirm your rules. Read them. Say them out loud. Run a fake loss drill. Ask, if I took a 2K loss right now, what would I regret about this mindset? Because humility is the antidote to delusion. Confidence isn't bad. Unanchored confidence is. The kind that floats you into overexposure, into fantasy, into compulsion. True confidence doesn't press harder. It protects longer. So take away. If a win changes your behavior, it's not a win. It's a warning. Success that breaks your process is failure in slow motion. So celebrate the win, but fear the temptation it brings. Because your next level isn't reached by trading bigger, but by respecting the voice that says you are still just one click from chaos. Comment green check if you've ever turned a good trade into a bad decision. Let's flip that pattern together. Chapter 9. The loneliness of the screen. Why trading feels so isolating even when you're winning. He made $12,400 in a single day, his biggest win ever. No tilt, no overtrading, textbook execution. He closed the charts, sat in silence, opened his phone, scrolled. No one to text, no one who'd get it. He ordered takeout, watched something on Netflix, didn't taste the food, didn't finish the episode, laid in bed that night wondering, why does the best day of my career feel like nothing? This is trading loneliness, and it cuts deeper than most traders will ever admit, because the truth is, even when you win, you are still alone at the screen. Let's talk about it. Trading is marketed as freedom, the laptop life, no boss, no commute. But what they don't tell you is no coworkers, no validation, no understanding. Your wins feel private. Your losses feel heavier. Your journey feels invisible. Even the people closest to you can't really see what you go through. You say, I had a rough day. They say, that's just trading. But it's not. It's your identity on trial. The loneliness gets worse when you're inconsistent, you're hiding losses, you're pretending to be confident, you're surrounded by social media success. You don't know who to talk to. You start feeling like you're the only one who hasn't figured it out. But you're not. You're just isolated. And isolation distorts reality. Let's break the science. Psychologist Dr. Julian Holtenstadt found that loneliness is as damaging to long-term health as smoking 15 cigarettes a day. And for traders, it's not just physical, it's cognitive. Loneliness increases cortisol, negative self-talk, emotional volatility, risk-seeking behavior. In short, loneliness amplifies your worst trading habits. Ever notice that your worst trades happen when you feel disconnected? It's not coincidence. It's neurobiology. The brain, under emotional isolation, craves reconnection. But if it can't get it socially, it tries chemically. Through dopamine, through wins, through stimulation. So you trade not for edge, for feeling. That's not trading. That's emotional compensation. Let's get brutally honest. Most traders don't quit because of losses. They quit because of emotional isolation. The kind that whispers, no one cares if you succeed. You're not good enough to talk about this. You'll look stupid if you admit you're struggling. So they suffer quietly, or they pretend, or they hide behind strategy talk because feelings feel too exposed. But the real ones, the ones who last, they find connection. One trader I know created a trade circle. 5 traders, weekly Zoom calls. No flexing, no screenshots. Just 3 questions. What did I feel this week? What did I fear? What did I avoid? That group has more longevity than any Discord I've ever seen. Because vulnerability is the glue of performance. You want to stay in this game long term, you need relational rituals. Not just routines, not just backtesting, but connection building habits. Try this. Find one trader who shares your values. Voice note once a week. Share one fear and one win. No judgment, no advice, just witness. Do it for 30 days. Watch your clarity sharpen. Watch your self-sabotage shrink, because you weren't meant to carry this alone. And for the solo wolves reading this, there's still a way. Create a connection journal. Each day, log, who would I share this trait with if they understood? What do I wish someone would say to me right now? What version of me needs to be seen today? You start to notice patterns, parts of you that feel ignored, parts that need validation, not results. And when you give them space, they stop hijacking your traits. Takeaway: the screen isn't your enemy, but the silence behind it can be. If trading is isolating you, it's time to reach back. Because this game is too brutal to play in your own head. You don't need a massive network. You just need one real mirror. Someone who says, I've been there. I see you. You're not crazy. You're just human. Comment seeing if you've ever felt the weight of silent wins or invisible losses. Let's build something deeper together. Chapter 10. The Discipline Illusion. Why willpower isn't enough to stay consistent. He thought it was a discipline problem. Every time he broke a rule, he blamed himself. I need to be stronger, more focused, less emotional. He bought books, tried cold showers, switched strategies, did breathing exercises, listened to Jocko Willink on repeat, and for a few days, it worked until he missed a setup, or tilted after a loss, or jumped into a FOMO entry. And just like that, he was back at square one, spinning in self-blame, doubting everything. This is the discipline illusion, and it's one of the most damaging myths in trading. That your success depends on how much willpower you have. It doesn't, because willpower is a battery, and every trade drains it. Let's talk neuroscience. The brain's executive function, your self-control center, relies on glucose and emotional regulation. The more decisions you make, the more depleted that system becomes. This is called ego depletion, and it's why you follow rules in the morning, break them by the afternoon, and justify dumb trades late in the session. You're not weak, you're fried. Stanford psychologist Dr. Roy Baumeister found that people who had to exert constant self-control perform worse on every following task. Discipline fades. Decision fatigue takes over. That's why just be disciplined isn't a strategy. It's a setup for collapse. So what works instead? Systemic constraint. Building an environment that makes bad decisions harder to access. Let me tell you about Max. Max was a scalper. Took over 200 trades a week, got wrecked on tilt often. We didn't start with mindset. We started with friction. Removed the mobile app. Set platform to lock after 3 consecutive trades. Installed screen dimming software after 90 minutes. Created a 5-minute cooldown quiz before any re-entry. Required a voice noting a friend after any loss over $500. Guess what happened? His discipline didn't improve. His environment did. And because of that, so did his consistency. You don't need more motivation. You need less access to sabotage. Because discipline that depends on your mood is not real discipline. It's performance art. The pros don't rely on willpower. They rely on design. Preset rules, automations, journal triggers, screen time limits, and accountability structures. They make the right thing the easy thing, and the wrong thing inconvenient. That's discipline by architecture. Want a framework? The DRAIN protocol. D, decide in advance. Define exact setups, size, rules, and shut-off times before the session starts. R, reduce access. Remove the ability to place impulsive trades. Think apps, relog timers, trade limits. A, automate accountability. Use trackers, alerts, or human check-ins that fire when risk is breached. I, interrupt patterns. Have a ritual or tool that forces a pause after a mistake, for example, voice memo, walk, cold water, etc. And neutralize emotion, journaling, breathwork, or reflection before re-engagement, not after damage is done. Still think it's about willpower? Let me ask. Would you tell an alcoholic to just be strong at the bar? Would you tell a gambler to just focus in front of a slot machine? Then why are you telling yourself to just be disciplined while bathing in dopamine triggers? Be real. You don't need to be tougher. You need to be smarter with your triggers. One final story. A trader I worked with built a decision-free trading week. He traded the exact same setup, same size, same ticker every day for 5 days. No decisions, just execution. He said it felt boring, monk-like, almost robotic. He also said it was the most profitable week of his year because consistency isn't about willpower, it's about removal of chaos. Takeaway: you're not a failure because you can't force discipline. You're just human. And humans don't thrive on constant restraint. They thrive on systems that remove the need for restraint. So don't worship willpower. Build constraints. Because when the environment protects your plan, you don't have to. And that's the real edge. Comment no more illusion if you're done relying on discipline and ready to design a better system. Chapter 11. The Journaling Lie. Why writing about your trades isn't enough. He journaled every day, every trade, every setup, every emotion. His Notion page looked beautiful. Color-coded tags, pre-market thoughts, end-of-day reflections. And yet, his trading didn't change. Still overtrading, still chasing, still breaking size limits, still repeating the same self-sabotage. He was documenting everything and learning nothing. This is the journaling lie, that writing about your trades automatically makes you better. It doesn't. Because journaling isn't about logging activity. It's about transforming behavior. Let's break this down. Most traders journal like accountants. They record, they categorize, they track, but behavior change doesn't come from spreadsheets. It comes from pattern recognition plus emotional processing. And most journals skip both. You don't need more data. You need deeper questions. You don't need PL charts. You need psychological maps. Because the biggest mistakes you make don't live on the chart. They live in your state. And if your journal isn't tracking you, it's tracking noise. Here's the science. Psychologist James Pennebaker ran a study on expressive journaling. He found that students who wrote about emotions tied to their experiences saw significant improvements in both mental health and decision-making. Not because they documented, but because they processed. When you name it, you reclaim it. That's the kind of journaling that rewires. Not injured here, stop there. But what was I feeling right before I broke my rule? What belief was driving that trade? What part of me was trying to protect me by acting impulsively? That's not journaling. That's integration. Let's look at why most trading journals fail. Mistake 1. Too mechanical. Only tracking entries, exits, win-loss without the inner experience. Mistake 2. Inconsistent reflections. Journaling only on red days or only when in the mood. Mistake 3. No feedback loop. Never revisiting past patterns to extract real changes. Mistake 4. No emotional truth. Avoiding the why behind the trade and staying stuck in surface level blame. One trader I coach rewrote his journaling process with 5 questions. What did I feel right before the entry? What story did I tell myself in that moment? Was I trading to win or to feel better? What deeper emotion was I avoiding? If I keep repeating this behavior, where does it lead? In 30 days, his win rate didn't move, but his clarity skyrocketed. And in month 2, his performance followed. Want to build a journal that actually helps? Use the following framework. The Jedi method, journaling for emotional and decision integration. J for judgment-free entry, write with raw honesty. Not to impress, not to justify, just to see. E for emotional check-in. What sensations, thoughts, or urges were present? Label them. D for decision dissection. What was the actual reason you entered or exited? Be ruthless. I for integration plan. What will you do differently next time and what system will support that? Also ditch the PL screenshots unless they're paired with a lesson. Numbers don't teach, narratives do. Your journal is your therapist, not your scoreboard. Treat it that way. Still not clicking? Try this experiment. Don't journal about your trades. Journal as your future self. Write entries like, today I respected every parameter. I felt the itch to chase, but paused. I exited early and journal why without shame. Even if it's not true yet, you're scripting the identity you're moving toward, and the brain responds to identity faster than instructions. Final note, the real power of journaling is not in the page. It's in the pause it creates between stimulus and response. That moment of reflection is what gives you your edge back. Not the pen, not the format, the space. The takeaway. Journaling is not about recording traits. It's about recording yourself. Because until you understand why you act the way you do, you keep repeating it. So stop hiding behind, "I'll log it later," and start asking the questions that actually move the needle. Write not to remember, write to reprogram. Comment Jetty if you're ready to make journaling your most powerful psychological edge. Chapter 12, The Perfectionist Trap. Why trying to get it right keeps you wrong. She spent 90 minutes analyzing a missed setup, replayed the chart 12 times, zoomed in, zoomed out, looked at the higher time frame, compared it to last week, drew a new fib. She wasn't learning. She was punishing herself. Because deep down, she believed, if I can just be perfect, I'll stop losing. This is the perfectionist trap, where trying to be flawless actually makes you fragile. Because in trading, perfection doesn't create power. It creates paralysis. Let's go deeper. Perfectionism sounds virtuous. It looks responsible. It feels like trying hard. But really, it's a fear response. A way to avoid shame, uncertainty, criticism, or the feeling of not enough. And because trading is full of uncertainty, perfectionists suffer most. Perfectionism shows up like this: over-analyzing past trades, needing confirmation before entries, freezing on near setups, endlessly tweaking your system, or calling it refinement when it's really avoidance. And the irony? Perfectionists often break rules more because their emotional threshold for imperfection is so low that one mistake causes a full-blown spiral. Let's hit the psychology. Dr. Brené Brown says perfectionism is a 20-ton shield we carry hoping it will protect us, when what it actually does is keep us from being seen. In trading, it keeps us from pulling the trigger, accepting risk, and taking red days as part of the game. Instead, we chase control, total clarity, certainty. But trading doesn't offer that, only probability. So when the perfectionist meets probability, they implode. Here's what makes it worse. Social media amplifies the illusion. You scroll Instagram or Discord and see 100% win week, perfect entry, didn't even flinch. You compare that to your messy process, your hesitation, your fear, and you conclude, I must not be ready yet. But you are. You're just watching highlights and judging your backstage. That's not self-awareness, that's self-torture. One trader I worked with used to say, if I get this right, I'll finally deserve to size up. But every loss sent him back to paper trading, not because he lacked skill, but because he believed mistakes disqualified him. We rewired the metric. He no longer judged himself on outcomes, only on execution, under uncertainty. Within 2 months, his size tripled, his stress halved, and he stopped freezing on clean trades. Not because he got better, because he got kinder. Want to break the trap? Use the permission to be wrong protocol. Before every session, write, today, I give myself full permission to be wrong and still be a good trader. Then post it on your wall. Say it out loud and trade through it. Why? Because when being wrong is no longer a threat, you stop overcorrecting. You stop spiraling. You start executing. Here's another tool, the 80% rule. If your setup checklist is 80% met, take the trade. Not 100, 80. Because perfection is expensive, but probability is profitable. One more thing. Perfectionism often hides in research. You tell yourself you're backtesting, but really, you're avoiding the emotional risk of executing. You don't need more data. You need more reps under uncertainty. Trade small, trade real, get dirty. That's how confidence is built. Not by thinking, by doing imperfectly. The takeaway, perfection won't save you. It will stall you. And the more you chase certainty, the more you delay growth. So stop aiming to be flawless. Aim to be fluid. Because the traders who win long-term aren't the ones who get it right. They're the ones who stay resilient when they get it wrong. Comment, done with perfect, if you're ready to execute with edge, instead of chasing the illusion of control. Chapter 13, The Identity Conflict. Why success feels uncomfortable, even when you want it badly. He passed a 50K funded challenge. First try. Clean stats. Max drawdown barely touched. Risk managed. System followed. And yet, the moment the live account kicked in, he froze. Skipped trades. Questioned his edge. Started micro-optimizing his strategy. Hesitated on A+ setups. By week 2, he was negative. By week 4, he gave the account back. Not because he lacked edge, but because his identity couldn't hold the success. This is the identity conflict. When the trader you're becoming clashes with the person you still believe yourself to be. Here's the brutal truth. Most traders don't fail from lack of potential. They fail because success feels foreign. You want the 6-figure months. You want the consistency. You want the professional mindset. But part of you is still holding on to the underdog story, the struggler's badge, the comfort of being the one who's trying, the protection of not having to deliver. Because the moment you start winning, you start confronting who you are without the fight. And that confrontation, terrifying. Let's hit the psychology. In psychoanalysis, this is called cognitive dissonance. When your internal self-image clashes with external evidence of change, your brain triggers anxiety. It doesn't say, congrats, you're growing. It says, this isn't you. You're faking it. They'll find out. You're going to lose it all. And that anxiety drives self-sabotage. You delay, doubt, downsize, destroy. All in the name of returning to the version of you that felt emotionally familiar. Here's how it shows up. Skipping setups you used to take with ease. Over-refining a system that already works. Journaling more when you start winning. To refine problems. Finding new fears that weren't there before and avoiding mentorship or community when things go well. It's not performance decay. It's identity defense. One trader I know had a 30K month, his first one. He bought nothing, told no one, didn't celebrate. The next month, he didn't take a single trade, froze every session. When I asked him why, he said something raw. It felt like someone else did that, not me. That's the identity gap. And until you close it, you keep pulling back just as you start to break through. Want to fix it? Stop trying to earn success by grinding harder. Start embodying the identity of someone who belongs at the level you're reaching. That doesn't mean pretending. It means normalizing the new. Try this exercise. Future self-looping. Each morning, journal from the voice of the trader you're becoming. Write, here's how I executed today. Here's how I felt taking A+ setups. Here's how I handled a losing day without spiraling. Here's what I told myself when I hesitated. Even if it hasn't happened yet. Because when you speak as that version of you, your brain starts looking for proof that it's already true. And the sooner your mind aligns with your performance, the faster your results stabilize. Another powerful move, change your environment. If everyone around you is still trying to make it, you'll feel guilt for outgrowing the struggle. Find rooms where your success isn't shocking, it's expected. Where growth is normalized. Where consistency is standard. Where you don't feel like an imposter for executing well. Because sometimes the problem isn't your edge, it's your ecosystem. One final thing, success won't feel comfortable at first. That's not a red flag. That's expansion. Your nervous system needs time to catch up to your progress. So instead of shrinking, breathe. Instead of apologizing, anchor. Instead of waiting to self-sabotage, practice receiving. Because you earned it. Takeaway. Success that feels unsafe will always be sabotaged. Not because you lack potential, but because you haven't updated your identity. The way out? Normalize the new level. Speak from your future self. Surround yourself with elevation. Let go of the old story. Because the real breakthrough isn't in the charts. It's in the moment you say, this is me now, and I'm allowed to stay here. Comment, I belong here, if you're ready to stop shrinking and start living the identity you've already earned. Chapter 14. The Exit Paralysis. Why you freeze when it's time to take profit or cut the loss. She nailed the entry. Perfect level. Volume spike, higher time frame alignment. She watched the candle push into profit plus 1R, plus 1.4R, almost 2R. And then it pulled back. She hesitated, froze, started narrating to herself, it might go again. This is just a retest. The bigger move is coming. Minutes later, green turned red. The trade stopped out. She didn't just lose money, she lost trust in herself. This is exit paralysis, and it's more common than most traders will ever admit. Not just on winners, but on losers too. So you wait, and hope. But trading doesn't reward hope, it rewards execution. Let's get psychological. Exit paralysis isn't about strategy. It's about emotional conflict. You're torn between wanting to be right, wanting to be safe, wanting to squeeze the most out of the trade, or maybe wanting to avoid regret. That's a cocktail for hesitation. And hesitation kills edge. Neuroscience explains this too. The anterior cingulate cortex is a part of the brain that processes conflict and uncertainty. When you're in a trade and your brain senses ambiguity about what to do, it triggers decision freeze. And the longer you wait, the more cortisol builds, the harder it gets to make a move. Your brain starts looping. What if it runs without me? What if I cut and it reverses? What if I just trail a little more? That's not risk management. That's risk avoidance. Here's how it shows up. You let green trades go red. You move stops wider when price nears them. You ignore targets you plan pre-trade. You bail early because you are scared to give it back. You add to losers to delay the exit. These aren't strategy flaws. They're emotional wounds expressing themselves through indecision. Let's talk about the fear under the fear. Most exit paralysis comes from fear of finality. Once you exit, that's it. It's over. You have to face the result. Fear of regret. You'll blame yourself if price moves more without you. Fear of lost identity. If the trade fails, what does that say about you? Until you make peace with those fears, you'll keep freezing. One trader I worked with was incredible at entries. Consistent, sharp, patient. But exits, a mess. We built a simple system. Hard stop. Pre-programmed, non-negotiable. Profit targets. Mechanical scale-outs at 1R, 2R, 3R, and an end-of-day auto-exit. But the real shift? We had him record a 10-second voice memo before every exit decision. He had to say, I am excited now because this aligns with my plan, this decision is good, even if the chart goes further. After 3 weeks, no more hesitation. Not because he was braver, but because he was clearer. Want to start fixing this? Use the exit mirror method. At the start of every trade, ask, what price behavior will tell me this trade is done, no matter how I feel? Write that down. Then, at exit time, look at it. Don't argue. Don't second guess, mirror it. Because the version of you that made the plan is smarter than the version of you inside the trade. Also, practice loss rehearsal. Before the trade even fails, say, if this trade hits stop, I will feel X. That's okay. My identity stays intact. This decharges the emotional landmine you're trying to avoid. Because most hesitation is just fear of what you'll feel after. But if you rehearse the feeling, it stops controlling you. Still holding winners too long? Try the no rewind rule. Once you exit, no going back to the chart for 30 minutes. No regret loops. No should I have held. Let the decision breathe. Trust the version of you that acted. You're not chasing perfection. You're chasing process integrity. Exit paralysis is not a discipline issue. It's an emotional trap. And if you don't build rituals around exits, your brain will hijack them every time they matter most. So start practicing closure. Start normalizing finality. Start trusting that an exit is a win if it honors your plan. Because mastery isn't about the entry. It's about knowing exactly when to stop. Comment, I exit with power if you are done letting indecision control the final 10% of your trades. Chapter 15. The FOMO Illusion. Why missing out hurts more than losing. He didn't take the trade. It was clean, A+ setup, exactly what he'd been waiting for. But the candle fell too fast. He hesitated, thought it might pull back more, told himself, I'll wait for confirmation. It never came. Price ripped, plus 3R, plus 5R, plus 8R. He watched in silence, mouth dry, heart racing, FOMO exploding. He didn't lose money, but it hurt more than a red day. And by the next trade, he forced it, chased garbage, overtraded, ended the day minus $740, all because of the one he didn't take. This is the FOMO illusion. When missing out feels more painful than losing, let's get brutally honest. FOMO isn't about the chart. It's about your identity under pressure. It says you're being left behind. Others are winning and you're not. You hesitated and now you're losing time, status, and momentum. And your nervous system treats that like a threat. Here's the psychology. Dr. Daniel Kahneman's research in behavioral economics shows that humans are more sensitive to relative losses than absolute ones, meaning you'd rather lose money than feel like you missed an opportunity that everyone else captured. Why? Because FOMO isn't about profit. It's about belonging. When you miss a big move, you feel excluded, inferior, out of sync with the tribe. That pain triggers action, not logical, not planned, just reactive. FOMO shows up like this: chasing extended moves, abandoning your system after a miss, increasing size on the next one, watching social media trades and comparing, replaying the missed trade 30 times, and forcing B setups because you need to make up for it. This isn't edge decay. It's emotional hijack. Here's what makes it worse. Most traders shame themselves for missing the move. They say, I knew better. I should have pulled the trigger. I'm such a coward. But that shame doesn't create clarity. It creates urgency. And urgency breeds destruction. One trader I worked with was addicted to Discord replays. He'd miss a morning move, see 4 other traders post wins, and feel worthless. We built a protocol. 10-minute lockout after any missed trade. No chart replays until market close. A single journaling prompt. What would I tell my best friend if they missed this move? That last question changed everything. Because FOMO softens when compassion enters the room. Want to kill FOMO at the root? You need a new definition of success. Most traders define success as I caught the move, but real success is I stayed aligned with my process no matter what ran. Because edge isn't just about execution. It's about discipline in the absence of opportunity. Here's a tactical move. The trade miss ritual. Every time you skip a trade, whether by mistake or design, write down why you didn't take it, what emotion came up, what you did instead, and one supportive sentence to reframe the moment. Example, I hesitated because the entry felt fast. I felt anxious and behind. Instead of chasing, I paused, breathed, and journaled. That's a win in emotional control. Stack enough of these, you'll start craving discipline wins more than dollar wins. Another key shift, don't punish caution. Traders often vilify themselves for being careful. But the market will always offer more setups. It won't offer more self-trust if you destroy it every time you hesitate. So forgive the miss, honor the pause, reward the restraint, because the trader who can wait beats the trader who can chase. Final tip, add a no FOMO line to your trading plan. Right, I accept that missing trades is inevitable. I do not need to chase to prove my skill. My edge is in my rules, not my reactivity. Read that before every session, say it out loud, let it anchor your nervous system before the chaos begins. Takeaway. FOMO isn't about missing money. It's about missing meaning. You think the trade defines your worth, but it doesn't. You define your worth by how you respond to the miss. So next time price runs without you, pause and ask, what will the future me, the consistent, grounded, funded me do right now? Then do that. Because winning isn't about catching everything. It's about never losing yourself in the chase. Comment FOMO no more if you're ready to choose clarity over chaos even when it runs without you. Chapter 16. The Over-Education Spiral. Why learning more can make you trade worse. He watched every trading webinar, read 5 books in 3 months, had 4 courses open at once, rewatched his mentor's live sessions nightly, backtested every variation of his strategy. But his results? Flatlined. In fact, they got worse. More hesitation, more second guessing, more conflicting voices in his head. He wasn't confused because he lacked knowledge. He was confused because he had too much. This is the over-education spiral. When the pursuit of certainty creates chaos. Let's be real. The trading world feeds off your insecurity. It says, one more course will fix you. This new indicator is the missing piece. If you're still losing, you just haven't learned enough. So you binge, you overload. You convince yourself, once I understand everything, I'll finally be consistent. But trading doesn't work like that because consistency doesn't come from input. It comes from implementation. Here's the cognitive breakdown. Your brain has a limited working memory. It can only hold and process a handful of concepts at once, especially under pressure. When you flood it with 5 indicators, 3 conflicting entry rules, multiple mentor voices, and strategy tweaks mid-trade, it shuts down. Or worse, it becomes hyperreactive. That's not education. That's mental clutter. In psychology, this is called cognitive overload. When your processing power is maxed out, your ability to make fast, confident decisions collapses. You don't act from edge, you act from uncertainty management, which looks like second-guessing your entries, overanalyzing every move, jumping between strategies, relying on others to validate your trades. All symptoms of the overeducation spiral. One trader I coached had 15 different strategy PDFs. He journaled every day, was active in 3 discords, and yet he couldn't take a single trade without anxiety. We stripped it all back. He deleted 12 PDFs, left 2 discords, stopped watching live streams, picked 1 setup, 1 time frame, 1 risk model. First 2 weeks, uncomfortable silence. Week 3, his best month ever. Not because he learned more, but because he finally stopped learning long enough to listen to himself. Here's a dangerous lie. More knowledge equals more edge. But edge isn't about knowing everything. It's about knowing what to ignore. Want to get out of the spiral? Try this. The subtraction audit. List every educational input you currently consume. Courses, discourse, podcasts, indicators, systems, YouTube channels, or maybe books. Now ask, which of these actually improves my execution? Which of these creates confusion, doubt, or comparison? And which of these do I use to avoid taking trades? Then cut ruthlessly. Don't optimize your inputs, minimize them, because clarity doesn't come from more. It comes from less noise. Another tip, set a no new info rule for the next 30 trading days. No new courses, no new videos, no new strategies, and no optimization threads. Just master what you already know. This is called deep work in cognitive science, and it's how true skill is built. You're not underqualified, you're under-integrated. Final mindset shift. Stop treating trading like school. In school, A students memorize and regurgitate. In trading, A students overthink and stall. The real winners, they focus on execution, on emotional resilience, on simplicity under pressure. Because in markets, the less you need to know, the more you can actually act. Takeaway. You don't need more knowledge, you need more integration. Because every new input without execution is just another brick in your wall of hesitation. So stop the scroll, close the tabs, silence the noise, pick one system, trade it small, refine only from experience. Because education is valuable, but over-education is paralysis in disguise. Come on, less is more if you're done chasing the next lesson and ready to master what's already in front of you. Chapter 17, the revenge trade reflex, when ego turns your account into a battlefield. He took 1 loss, just 1, 450 down, managed well, clean stop, part of the plan. But it didn't feel clean. It felt like attack. His chest tightened, jaw clenched. He muttered, "They're not getting away with that." 15 minutes later, he was back in the same ticker. No setup, just spite. 2 hours later, 4.8K. And the worst part, he knew what he was doing. But ego had taken the wheel. This is a revenge trade reflex. When a single loss triggers your need to win back control. Let's be clear. This isn't about the money. It's about identity collapse. Because when you take a loss, especially one that feels unjustified, it's not just your PL that takes a hit. It's your self-concept. You feel disrespected, exposed, weak, or maybe powerless. And your nervous system scrambles to restore emotional balance. But instead of pausing, you punch back. That's not trading. That's retaliation. Here's what's really happening. Your brain is engaging in a process called emotional hijacking. When triggered, the amygdala, overseer of threat response, overrides your prefrontal cortex, responsible for logic and planning. It floods your body with adrenaline, narrows your focus, and prepares you to fight. Not with fists, with risk. So you re-enter, chase, oversize, ignore your plan. Tell yourself, just 1 clean trade and I'll be back. But revenge trades aren't about recovery. They're about relief from shame, from powerlessness, from the feeling of being outplayed. That's why they feel so addictive, because in the moment they feel like taking your dignity back, but they almost always make the wound deeper. One trader I coach had a ritual. Every time he revenge traded, he screenshot the loss and write a letter to his ego. Raw, brutal, honest. After 4 of those letters, the reflex slowed. Why? Because he stopped avoiding the pain and started witnessing it. He saw that the revenge trade wasn't about markets. It was about emotional survival. Here's how it shows up. Re-entering the same ticker without a new setup. Doubling size to make it back fast. Chasing fast-moving plays after a red. Telling yourself you just need one win. Or ignoring your rules because they failed you. This isn't strategy collapse. It's identity protection. And until you make peace with red days, you'll keep turning them into spirals. Want to break the cycle? Use the RED exit protocol. Right after any loss. R, reflect the feeling. Name the dominant emotion, anger, shame, urgency, fear. E, externalize the impulse. Write or voice note what your body wants to do next. For example, I want to double the size and hit this next scalp. E, delay action 20 minutes. No entries, no charts, just pause. Give your prefrontal cortex time to reboot. Then ask, am I trading to recover capital or recover control? If it's the second one step away, because edge doesn't come from emotional imbalance. It comes from psychological sovereignty. Here's another reframe. Not every loss is a threat. Some are simply tuition. Others are random variance. A few are poorly executed risk, but none of them define your worth. And until you learn to take a red without making it personal, you'll keep using trades to defend your ego instead of grow your account. One final story. A trader I mentored set a hard rule. If I revenge trade, I donate 10% of the loss to a cause I don't support. Yes, a cause he does not believe in. Within 3 weeks, revenge trades disappeared. Because he attached the pain to something bigger than himself. He created accountability outside the chart. Sometimes, that's the edge we need. Takeaway. Revenge trading isn't poor strategy. It's emotional warfare. You're not just fighting price action. You are fighting the part of you that can't sit with loss without needing retaliation. The antidote? Pause before acting. Reflect before entering. Separate self-worth from outcomes. And build rituals that anchor you in truth. Because mastery isn't in never losing. It's in never letting loss turn you into someone you no longer recognize. Come and ego out if you're done letting red candles decide who you are behind the screen. Chapter 18. The Dopamine Drain. How Trading Hijacks Your Brain's Reward System. He used to get excited about clean setups. He used to feel proud after a green day. He used to enjoy trading. Now, he just refreshes his stats. Scrolls Discord. Scrolls Twitter. Scrolls PL. Feels nothing. No pride. No joy. Just numbers. And on red days, a spiral. Not because he lost big, but because he didn't feel anything anymore. This is a dopamine drain. When trading stops rewarding you emotionally and starts becoming a numb cycle of hits and withdrawals. Let's unpack it. Dopamine is not the pleasure chemical. It's the anticipation chemical. It surges when you expect reward, when there's risk, uncertainty, potential upside. That's why gambling, video games, and yes, trading light up the same reward circuits in the brain. Every trade, every candle, every almost fill, a dopamine hit. But here's the catch. The more often you stimulate that system, the more it takes to feel something. It's called dopamine tolerance. And it's why. A $500 green day feels meh now. You feel bored unless you're in the trade. You keep checking charts even when your plan says not to. Winning doesn't satisfy, but not trading feels agitating. You're not addicted to trading. You're addicted to the stimulation of trading. And when that stimulation drops, your brain panics. It says, do something, get back in. Don't just sit here. So you re-enter, overtrade, size up. Not because you saw a setup, because your brain needed a fix. Let's bring in the science. Dr. Anna Lemke, author of Dopamine Nation, explains that modern reward systems are built on pleasure-pain balance. Every time you spike dopamine, your brain counterbalances with a dip. That's why after a rush, either a big win or a fast scalp, you often feel empty, tired, needy, and/or irritable. Your brain isn't broken, it's balancing. But if you don't let that balance reset, you chase more stimulation, and the cycle continues. So what does this look like in trading? I'm up 2R, but I'll take one more scalp. I'm flat today, but I need to trade something. Markets are slow, let me flip through 20 tickers. Red day, screw it, I'll revenge trade and feel alive again. That's not strategy, that's dopamine management. One trader I worked with kept blowing his account after every major green streak. We ran a dopamine reset, 48 hours with no screens, no Discord, no YouTube, and no backtesting. More walks, journals, sleep, and real food. He said it felt like withdrawal. By day 3, he had clarity. He stopped overtrading, stopped needing the hit, started trading his plan, not his impulses. Why? Because his dopamine baseline was finally reset. Want to protect your edge? Build a dopamine detox protocol. 1 screen-free day per week. No charts, no data. Let your brain breathe. Limit PL checks only once per day after market close. Replace dopamine. After trades, do something low stimulus but rewarding. Walks, journaling, and reading. No entry rituals. If you don't see a setup, reward yourself for discipline. Teach your brain that waiting is success. End session shutdown. No late night chart replays or Discord binges. End clean. Here's a reframe. You're not weak because you crave more trades. You're just wired like a human. But the traders who win long-term aren't the ones who chase dopamine. They're the ones who protect their neurochemistry. They trade like monks. Calm, detached, still. Because they know the better I manage my brain, the less I have to manage my damage. One last note. If trading feels empty lately, it might not be the market. It might be your reward system fried from overuse. And sometimes the best thing you can do for your PL is step away long enough to feel normal again. Takeaway. Trading is thrilling, but if you chase that thrill too often, it stops being fulfilling. You feel dull, impulsive, unfocused. Not because you're undisciplined, but because you are drained. So take back control, build rituals, rest your system. Because your edge is only as strong as your ability to feel calm when there's nothing happening. Calm and reset the hit if you're ready to stop feeding the fire and start trading with a clean nervous system. Chapter 19. The hidden grief of trading, mourning the life you thought you'd have. He looked around the room. Empty coffee cups, notebooks, screens, silence. It was his 3rd year trading full-time. No boss, no meetings, no commute. And still, he felt hollow. Not because he wasn't profitable. He was. But because he was mourning something he couldn't quite name. This is the hidden grief of trading. Not the grief of losing money, the grief of losing who you thought you'd be. Let's go there. Most traders enter this game with a dream. Freedom, autonomy, time, wealth, pride. And while parts of that become real, others fall apart. Friendships fade, family doesn't understand, daily structure dissolves, validation disappears, emotional anchors vanish, and without even realizing it, you start grieving. Not loudly, not publicly. Quietly, internally, lonely. Psychologists call this disenfranchised grief. It's grief that society doesn't recognize. Grief without a funeral. Grief without support. Because how do you say, I miss my old life, even though I chose this one? How do you say, I wanted this, but I didn't know what it would cost? One trader I know left a 10-year tech career. Full benefits, 6 figures, respect. Now he trades alone in a small apartment. It's profitable. But every night, he misses water cooler banter. Client wins. Friday, team drinks. He told me, I didn't know I'd be trading the entire identity I built just to become someone no one else even understands. That's grief, unspoken, unacknowledged, but real. Another trader I coached had 3 kids. Used to be present, playful, available. Now, snaps easily. Always on edge. Preoccupied with setups, even at dinner. He said, trading gave me time, but I don't feel like I'm here anymore. That's grief too. Grieving the version of you who wasn't so consumed by candles and control. And let's not forget the early grief. Missing the first 100 setups, blowing the first account, losing confidence, or letting people down who believed in you. It all stacks. It all hurts. And most traders never process it. They just push through, learn more, trade more, numb more. But here's the thing. Unprocessed grief leaks into your confidence, your discipline, your relationships, your ability to regulate emotion. Because if part of you is still mourning, another part of you is resisting presence. And that resistance kills flow. Want to start healing? Begin here. 1. Name what you lost. Write it out. The routines, the titles, the certainty, the structure, the ego safety, the relationships. Bring it into the light. 2. Give yourself permission to feel it. It's okay to miss your old life. It doesn't mean this one isn't valid. You can honor the cost without canceling the reward. 3. Build new emotional anchors. Morning routines, post-trade rituals, weekly connection calls, mentorship circles, journaling with depth, and so forth. You don't just need an edge. You need a container for your humanity. Because trading removes structure. You have to rebuild it yourself. 4. Let go of arrival. The version of you that imagined trading success probably thought it would feel different. And it's okay if it doesn't. It's okay if joy looks more like stillness than celebration. It's okay if freedom feels lonely sometimes. One trader I worked with used to cry after green days, not from happiness, from confusion, because success didn't fix what he hoped it would. He said, I thought hitting this level would make me feel proud, but all I feel is empty, like I left something behind and I'm not sure what it was. We sat in silence. Then I asked, can you grieve him? The version of you who needed this dream to survive? He nodded, and something softened. Because sometimes the most powerful step forward is saying goodbye to the version of you who carried all the weight. Takeaway. Trading success is real, but so is the grief of who you were, of what you gave up, of how this path reshaped your soul. And you don't need to hide that. You need to honor it. Because grief is not weakness. It's proof that you care deeply. And when you learn to hold both grief and growth, you become unshakable. Comment, I honor the cost if you've ever felt the quiet grief of trading and are ready to move forward with full presence. Climax the mirror trade. Facing the hardest trade you'll ever make. There's one trade you can't backtest, can't optimize, can't automate. It doesn't show up in your data, but it shows up in every decision you make. It's the trade you make with yourself. You stare at the screen, but what you're really watching is your reflection. Every candle exposes your fear. Every fill exposes your hope. Every exit reveals your belief about what you deserve. That's the mirror trade. This game, it isn't about charts. It's about you, about the version of you that shows up when there's risk, when there's pressure, when there's silence, when there's uncertainty and no one clapping. The truth, most traders don't quit because they can't build an edge. They quit because they can't face the parts of themselves that trading reveals. The overcontroller, the people pleaser, the avoider, the perfectionist, the addict, the self-saboteur. They rather burn out than break open. But you're still here, reading this, searching, growing, and that means something. You're ready, not for the perfect trade, not for the dream account, not for the external win. You're ready to face your own reflection. The moment that changes everything isn't when you finally hit consistency. It's when you say, I will meet myself fully, honestly, and keep showing up even when it's hard. That's the real edge. Because the hardest trade isn't long or short, it's inward. It's placing a bet on your ability to evolve, your willingness to forgive yourself, your strengths to sit with discomfort, your commitment to show up tomorrow, your belief that this isn't just about trading, it's about who you're becoming through it. So here's your final setup. Simple, clean, exposed. You're at a crossroads. Same patterns, same stories, same fears, or something new you choose. Takeaway. You don't just trade markets, you trade yourself every day, every decision, every breath. So make it count. And when you look in that mirror, don't flinch. That's the real trade. Comment I'm in if you're ready to take the mirror trade, the one that turns traders into traders for life. You made it to the end, not just of this video, but of a deeper journey through fear, through identity, through sabotage, through silence, through all the places trading forces us to look when no one else is watching. Because that's the truth about this game. It's not about charts. It's about you. And now you know more than most will ever understand. Why your brain resists consistency. Why self-sabotage follows success. Why you can know exactly what to do and still not do it. Why trading grief, dopamine crashes, perfectionism, and FOMO are not personality flaws. They're human patterns under pressure. And now that you've seen it, you can trade through it. You don't need to be perfect. You don't need to have it all figured out. You just need to do what most never will. Look in the mirror. Tell the truth. Trade yourself with the same precision you use on the chart, because that's where real mastery begins. So here's your next move. Comment below. Which chapter hit you hardest? Where do you see yourself now? Subscribe if this rewired something in you. We drop these deep dives every week, and everyone is built to make you a more resilient, self-aware, and dangerous trader. Share this with a trader who's stuck in their own patterns. And if you're ready to go even deeper, stick around. The next one drops soon. From meme hype to mental mastery. How influencers are shifting the psychology of trading. Let's keep growing. One pattern at a time. You're not alone. You're just getting started.